You know, the reason why I invest into the stock market is because I needed to figure out a way how I can make money on top of the money that I actually have. I needed my money to actually work for me. And that's the reason why I got into the stock market. Today, I want to discuss with you guys 3 different stocks that you can invest in that will actually pay you from January all the way through December every month. With these 3 different stocks, I'm also going to show you how to actually calculate the dividend that these stocks will actually pay you for being invested into their company. But before we get started, those of you that are actually new to my channel, I really appreciate you guys for coming. So stop what you're doing and go ahead and subscribe and hit the like button down below. Also, before we get into the video, guys, there's a gem at the very end of the video, but you gotta actually watch the whole video to get the gem, and then you'll understand why. Let's go ahead and get started into the video. We're gonna go ahead and start off with JPMorgan. JPMorgan is actually a pretty old company. Started back in the 1700s. It's a banking institute. It has a dividend yield of about 3.86%. It's a pretty safe dividend. It actually has a market cap of about $284 billion. What does that actually mean to me? When you look at your stocks and you see the market cap, which is pretty big, it was about $284 billion, that means that company is actually a large company. Another thing to note, all 3 of these companies are actually a part of the S&P 500. The S&P 500, for those of you that don't know, actually tracks the economy. If the economy is actually going good at the moment, or if the economy is actually going bad at the moment. Right now, we're kind of in a bear market. So when the economy is actually good, that means it's a bull market. That means a lot of people are actually invested into the stock market. But when it's a bear market, a lot of people are actually taking their money out of the stock market. And for somebody like me that's an investor, I want to put my money into the stock market when it's actually a bear market, because long term, I'm actually going to win the game, in my opinion, and actually getting paid for those dividends and actually putting those dividends right back into the stock market. That is the way that I invest into the stock market. But let's get back to JPMorgan. So like I said, it has a 3.86% dividend yield. The price of this stock is about $93.25 with a pretty good market cap. Like I said, it's a safe company to be invested in, and that's what the market cap actually shows me. Let's go ahead and start calculating this dividend, okay? So give me 1 second here. Let me get my phone ready. So how we calculate the dividends, we're gonna have the dividend, we're gonna times it by the price of the share, then we're gonna times it by the number of shares, and we're gonna divide that by 4. So how that works for the JPMorgan is we're gonna times the dividend, so it's 0.0386. We're gonna times that by the price of $93.25. And then by the number of shares. At this time, we have 1 share, so we're gonna just times that by 1, and then we're gonna divide that by 4. And that's gonna give us 89 cents per share. And that is exactly what we're gonna get paid every 4 months. For this stock, we're actually gonna get paid on the dates of January, April, July, and October. So like I said, the other 2 stocks that we're gonna be investing in today are actually gonna pay you on different months. The next stock that we're going to be looking at is AT&T, which is actually one of my favorites. I'm actually invested into this stock market as well. Mind you, all of these companies that we're talking about today is a part of the S&P 500. Like I said, the S&P 500 index consists of about 500 strong companies in the United States that have Microsoft, Apple, AT&T, Chevron, and so on, with a market cap at least $8 billion per company. So the S&P 500 won't even acknowledge you if you don't have at least $8 billion in market cap, which is a pretty good. That shows me that this is a strong company. And the S&P 500 can fluctuate if these companies are actually affected. So that's what's going on right now with the market. These companies are actually affected, so these companies are actually down right now. The S&P 500 is actually tilting to a bear market right now at the moment. So AT&T has about 6.96% of a dividend yield. The price of this stock is $29.90, and the dividend growth was about 2%. So we're looking at this stock. It is a pretty safe dividend. I have this stock, I have about 10 shares of it. I really like it. It pays out a really good dividend as well. That's another thing that you want to do. You want to kind of invest in things that you're kind of familiar with, that you have. If it's investing in Apple, investing in Microsoft, investing in Chevron because you use their gas or etc. That's how we want to do it. So let's go ahead and calculate AT&T's dividend first, okay? So we'll go ahead and calculate AT&T's dividend as well. So we'll start out with the percentage, which is 6.96%. So we're going to do 0.0696%. We're going to times that by the price of the stock, which is $29.90. And because I have this stock, I'm actually going to use my own shares. I'm going to times that by the 10 shares that I have. That's about $20.81 annually. So because we get paid quarterly or every 4 months, I'm going to divide that by 4. And that's going to give me my price of $5.20 every month that I get paid on. So those months are going to be from February, May, August, and November. I'm going to get paid $5.20. Mind you, don't think that, oh, that's not that much money, that's just a little bit. I'm actually diversified in my portfolio. I have many companies that I'm investing in that actually pay me a dividend, from a high dividend to a low dividend to a safe dividend. So be aware that I have multiple streams of income actually coming in. This is just one stock. So that's how you want to do it. You want to build that portfolio so you can have that large amount of portfolio that is actually going to pay you back those dividends as well. So let's go ahead and get into the next stock. It's Chevron. Chevron Corporation has been around for a very long time. It has a market cap of $167 billion, which that, like I said, it shows me that this is a strong company. Another thing to take note of, AT&T and Chevron is actually a dividend aristocrat. So which that means is these companies have increased their payment in dividends for the last 25 years. So take note of that. These companies are pretty strong companies. And if you want a strong portfolio, you want to get a few of those dividend aristocrats as well. And there's a list of those dividend aristocrats that you can Google them. It's about 25 of them. So you should definitely invest in those companies as well. So this Chevron has a dividend yield of about 5.77%. The price of this stock is 89.44%. And you think in mind right now, we're going through the coronavirus situation. We have a lot of supply of oil and not enough demand. So the stock prices on this stock is going to be down a little bit. So that's why I'm investing in it, but it definitely gives you a good dividend yield. These companies like Chevron, they want you to be invested into their company. They love people that are invested into their company. So these stocks like Chevron will actually pay you that dividend to say, we thank you for being a part of our company, be invested in it. Here's a dividend for your stock that you've purchased from us. Understand this as well. Stocks do not have to pay you a dividend. It's something that they say you're in their good grace. We appreciate it. Now, since this stock is actually a dividend aristocrat and they've been going up for the past 25 years, I would think that this company is also going to still pay you no matter what. But it's something to think in mind that companies can cut their dividends, they can take away their dividends because they want to stay above water. I know some companies are actually thinking about doing that because of what's going on with the coronavirus. So that is something that you want to keep in mind as well. And Chevron is actually going to be paying you on March, June, September, and December. And so let's go ahead and go over the price of what the stock will actually look like here. So you have a dividend yield of 5%. So you're going to do 0.0577. We're going to go ahead and times that by the price, which is $89.44. And then we're going ahead and times that by the number of shares. Let's say I had 50 shares of this stock here. 50 shares, that's going to be $258.03. So because we're getting paid quarterly, this is the annual price, but because we're getting paid quarterly, we're going to divide that by 4. And that's going to give us our price every few months, which is $64.50. And like I said, those are the 3 stocks that are going to pay you from January through December. That means you will always have a paycheck every month from at least one company. Now, if you have a portfolio that is diversified and you have at least 20 to 30 different stocks, that means you have that are dividend stocks. You have 20 to 30 different dividend stocks that are actually going to pay you. So that's what you want to keep in mind. And guys, it's time for the gem of the day. This is what I wanted to let you guys know. There are indexes out there that you could actually follow the S&P 500. If you saw that the S&P 500 was pretty safe, it does have over 500 companies, and you said, you know what, I'm going to invest at this time at every company the S&P 500 has, you can do that. Or you could find an index that actually follows the S&P 500 and you can use that like a Vanguard. You can invest in that and it will also track and distribute your shares throughout about those 500 different companies. It would actually follow along the S&P 500, and that is a way that you could stay conservative. That is a gem for us new investors. That's a gem for people that just can't figure out where to invest at. But that's all I have for you guys today. I really appreciate it. It's all about diversification and making income on top of income and on top of income, diversifying your portfolio and creating assets for yourself. Thank you guys for listening in. I really appreciate it. I hope you guys come back and watch the next video. Thank you very much. Peace.